how's it going, folks? Let's get into our midweek update for September 21st. And yes, let's just jump straight ahead. It is a Fed day. Yep. And we've had a pretty good anticipatory move, if you will, up until this day. We'll get into it here, but we'll see what we can take a look at, because on Fed days, I kind of like to sit on my hands, but that doesn't mean we can't prepare for a couple of things. So let's share what we have. If you guys want to go ahead and type into the box what you want to look at, please do, but make sure you take responsibility for the outcome. You get the disclaimer there. Okay, so market recap. The high CPI sends us below support levels. We had a lot of conversation at the office about this, and this is something I'm just going to have to give Darren props on. And this is something that he brought up months ago. What the CPI isn't really taking into consideration is higher rents, higher mortgage, and some higher food prices. There was such an emphasis on energy and oil and gas that when it came down, yeah, sure, it had a small effect, but that wasn't the true culprit. We're starting to see some of these things raise their head. And I'm on the bottom there, the economic data. I jumped all the way. The inflation's still apparent regardless of lower energy costs. We're still seeing it at the grocery stores. We're still seeing it in rents and in mortgages and things of that nature. So unless some of those prices come down, I don't think that inflation is going to get curbed anytime soon. So once again, we've got the FOMC statement on deck. Forward outlook will cause reaction, but it could be delayed. Made mention of this on Sunday's trading room. Rob had to fly solo, but he did a great job and he made a good point. The expectations of a 0.75 or 0.75% basis point raise is 100%. There are rumors of a full percent, which might send a little bit of a tailspin in the market, but in the long term, it could show that the Fed's trying to get ahead of it, which could create some speculative purchasing. Folks, what I've seen a ton of in the sentiment-wise, we are definitely bearish. I agree with Corey 100% when he talked about yesterday that we are definitely in a bearish trend. He called that bear rally perfectly. We fell apart. We are in a bearish market. But I'm seeing speculative purchasing off the bottoms, and the reason why I'm seeing this is because there is no fear. There are traders out there or institutions that are willing to throw a couple of dollars out there and try to guess the bottom. Until we get that capitulation, I believe we're shooting above 30. I'm thinking 30, 35 VIX-wise. There's just going to be these dart throwers, and it does cause some pretty aggressive bounces like we saw a couple of weeks ago, right? Very good aggressive bounce, but quickly smashed by more fear or worries about inflation. So we've got this reactionary market, not a lot of fear out there. Yeah, tell me something I don't know. Inflation's bad, but the speculative investors they're out there. And I'm wondering if that needs to be flushed out before we can actually say or hit a true bottom. See, there you go. There's my 2 cents. So we'll take a look at it. Definitely the Fed is still hawkish. I'll review this one more time before we go out to the live markets. But yeah, they have no intention of doing nothing but just stepping on that accelerator. So let's get into some trade ideas because there were some awesome ones. I took a look at Wing. Well, we took a look at Wing on Wednesday. I liked it on Monday. And guess what, folks? It is still confirming to the upside. So if you want a little bit of a bull pullback, that is confirming. This is a cool place to be. Neutral trades. CMG and Uber. Was it? Yeah, CMG, Chipotle, and Uber. Now, Uber I pulled from Corey's class yesterday. I've seen it before, but I put it more to the neutral side. I think it was a bull trade, but I do like how it's kind of hanging in there and consolidating. When you see weakness in the market, some of these outperformers can neutralize, if you will. They're larger ranges. You could play them as condors, stuff like that. Bear side, Meta, it slipped a little lower. It still looks weak. IBM hasn't really given up yet, but it's a potential trade. That's what these are for, right? So let's jump into Wing. And this is just sweet. Look at this confirmation today to the upside. You know, the markets are up. I was reading an article. It was interesting saying that the last few Fed meetings, the markets have finished higher. Whatever, take that for what it is. It doesn't matter in the long term of things. They're basically talking about one day. There is an area, though, that I would be very comfortable or confident buying Wingstop if it gets above the 140 mark. That last resistance is set here in August. So you could play it all day long. If the markets are indeed going to have a little bit of a push, let's say the Fed comes out, does the 75 or even a full basis point. Markets react bearish or have some sort of a little bit of a hiccup. However, their forward thinking is we are in line. We expect things to subside. That's all we're looking for, is what the Fed speaks going to be after their policy change. This could continue higher, and this would be a nice bull pullback confirmation with a target about 150. So I do like wing to the upside as long as the markets agree with it. But that's it. Let's move over to the sideways stuff. This is Chipotle. You guys know my feeling on these, my $1,700 burritos, but it does have a really cool range, and it's massive. It's actually holding up, so I would be glass half full on this, definitely leaning to the bull side. I did move it to sideways. Just expectations of weakness in its sector. It's consumer cyclical. A little bit worried about that. Now, consumer defensive's doing pretty decent. In fact, it's the strongest sector. We'll get there in a second. But the cyclical, this thing's holding in there. It's got a wide enough range, so you could be sideways to up on that. It might just kind of stick to the 1700 level for you guys that want to trade something a little bit more sideways. So, it's still in play. Here's Uber. Also, I think this was on the bull list, but it seems like it's struggling a little bit here at the 32 level. I can go all the way back to, what's that, mid-April through the end of April. It had a little bit of a hiccup here at about 33. Looked like it wants to pull back, but it is staying comfortably above that 20-day moving average. It touched it today. We'll see where it ends. Obviously, this could change its mind completely. But you do have actually a larger range between 28 and 33. So if you guys wanted to play something in here, thinking that maybe the markets get a little bit weaker, this is held in there pretty decent. So we'll see. We'll see how that plays out. Something to look at. Now on the bearish side, it's kind of where you find it. Meta's just been struggling for a long, long time, and I truly believe it will continue to. There's just too many moving parts for this. There's also too many competing technologies. So it's pretty interesting to see some of these that fall from grace and how they behave. But it's a beautiful breakdown. Oh gosh, was that a couple of weeks or so ago? I thought that was pretty neat. And then it's just kind of bleeding lower. Now, I don't know if I want to get too aggressive directionally on this. In fact, if you guys want to maybe measure some sort of a slope here to see if you could project, I know it's off screen, you'd have to add more days. Or you could do like maybe a Fibonacci snap between this level and here, an extension, and see how far it is. But something sideways to down, I'm actually pretty cool with that. I could get behind it, especially if we see weakness in the communication services that we've seen for a while, and if the markets continue to stay on their bearish track, right? IBM, this is one that I thought was pretty interesting just in the sector itself, technology. It didn't really jump at me, but it's interesting to see it struggle at their lows here, at its low, I should say. Right around, I can call it 126, bringing it all the way forward from April as well. It's interesting. Hopefully you guys have been picking up that I'm taking a look the last few charts on April's lows. We talked about these markets visiting their all-times that they set in June. It's going to take capitulation to get there, but if these markets continue this bearish trend and we get that spike in the VIX, I could see a flush out easily hitting it. Some of these stocks, like we've seen over the last few, are already down at these levels. So keep that in mind. They could bleed lower. So I think a break below the 126, maybe if you wanted to get more restrictive and let it get down below the 124, because you can see all the way back here, if I can drag that down, you got 120 that it visited late February, right? So just some things to look at. These are darts that you could throw in the longer term if you truly believe that we're going to continue in this bearish market. Corey made a really cool comment yesterday. Let me get to the market analysis here about bearish trends can last up to a year, 2 years, and we're not even really a year into it. So there could be a lot more pain coming, and that would be something to slow play and just kind of let bleed off. So what are the markets doing so far? I took this snapshot over here on the right. You can see the diamonds, the SPY, and the Qs. This is from Monday, Tuesday to this morning, and they haven't done anything. After that move on Friday, breaking below that support level we'll see here in a minute on the spiders, and all of them actually, it just parked. We knew it would. We knew we're waiting for the FOMC statement. Everything that's going is going. On Monday, I even thought that we'd have an up day and then a down day, but really wouldn't go anywhere. So it's really kind of hinging on this, and it's going to be interesting to see. So how do we finish? Well, pretty much flat on the indices, or at least the ETFs. The Russell a little higher. Oil 1.9% down. I really have to believe that's a lot to do with Russia and what's going on over there. And then gold has stayed just a little higher or a little lower. It really hasn't done much. It's just bleeding off, and I do believe it's bleeding off because of the dollar's strength. All right, so let's jump out to the SPY chart. I'm going to zoom in a little bit on this bad boy for us, and let's see what's going on. We'll do right about there. There we go. So you can see that it had that gap down on, what is that? That's Friday, correct? Yeah, Friday. Rob made a great mention. Hey, if we could get back up above this point, then he's not going to be as bearish. And we gave it a good shot on Monday. Didn't make it. Then gap down, stayed inside, and we've been sideways ever since. So we are below a pretty key support level here going into the FOMC meeting. And right now, I have to be glass half empty. I truly do. There was not as much interest as we saw on this. And I'm going to call it a speculative rally or short cover rally. This is one that I like to give props to Corey because he called it. He never believed in this move to the upside, thinking it would touch the averages and fall over, and it's exactly what it did. So we're in a situation here where it could go higher or lower. Understand there is enough potential out there. There are speculative traders. If there's any sort of positive talk out of the Fed speak, or let's say they do the one basis and they said they got ahead of it and they think they're going to be okay and they could lighten up next quarter. Anything glass half full, I would not be surprised to see this thing come back and retest the 400. I wouldn't. However, based on the current trend and what we're seeing in deeper past that, the CPI and the true cause of it, meaning this isn't just energy. This is rents. This is day-to-day living. This is mortgages. This is food. I don't know how we don't just at least consolidate or maybe even start to test those lows. Now the big kick here, and I can do this, guys, because I had to go live with us to get these charts. Let's take a look at this little VIX here since we're here. The big key is going to be this bad boy. And you could see it is kind of poised. And I'm going to leave this zoomed out because I've got kind of a cool chart going here. Right? Look at that. It's interesting. You could have this little ascending triangle pattern in the short term. But this looks like it's kind of building. I don't know if it's going to race up to this 44 level in one big swoop. But it's looking like it's trying to gain a little bit of momentum, at least over the last, since August. But it's still nowhere near capitulation levels. Now I'm going to go ahead and zoom in on it. And what I mean by that is, there's no spikes in it. There's no spikes in it. It's just moving along. Yeah, I know we have some worries out there. I know we have inflation. I know that the markets are going to go down, but no one's pulling their money out. In fact, a couple of people are, some people out there still throwing darts at it. So I'm going to keep an eye on this as well. So let's move along. Let's take a look at the diamonds here. And then we'll take a look at the Qs. It's in the same situation, right? A little bit lower. Got the same lines if I want to get my pin and draw. It's below that 310. It actually came up and almost touched it. Still below that pretty meaningful resistance level. This is the one it hit mid-May. All right, so that's that head and shoulders pattern. I'll make it a really ugly looking one. But it's got that neckline. So the idea is if you want to continue, sure, you might be able to rally up here. Continue lower, even if it's short term, and roll back. So we are basing to go lower, even with a little bit of a hiccup or a bounce. Let's say it's some not very good news, but we get a relief rally or a short cover rally. It could actually set even a lower high, and we could roll back over. The key, once again, I'll say it, it's that volatility index on the next time we break down. I need to see participation with fear. Other than that, it's just a bleed off, and you're going to see speculative buying come in and try to slow this down. So let's get into the Qs. And then we get back to our charts. Zoom in a little bit here. So the Qs they're actually faring a little bit better this morning. They're trying to get back up to their level. They actually were the weaker of the three. As you could see that they had broke pretty much Thursday of last week. They're already starting to fall, but they've got those heavy communication, technology, some of those speculative stocks, some of the ones that are a little bit more volatile, but it's in the same situation. It's kind of crazy. There's not much to get out of the day, but the markets are poised to make a move depending on what the Fed does and how we deal with it. All right, so that's that. Let me get back to our presentation here and take a look at some economic reports. It's light because it's going to be very specific to the FOMC statement, as you guys can see that there at 2 p.m. today. Of note, interesting, the home builders index did drop. You can see it here at 49, expectation of 47, go to 46. So the outlook of the home builders is getting pessimistic. This is basically like small business inventories or consumer sentiment. It's a sentiment of home builders. It is definitely going south. Building permits, I thought, was pretty interesting because they're also going south. Housing starts and existing home sales. Housing starts upticked. Now, the argument or the idea is, hey, it's a little bit late. They already had their permits. They were already scheduled to build months ago, and they're just starting to break ground now. So we can kind of throw that out as, hey, this is usually delayed data, but 140, expecting it uptick to 150, went to 158 or 1.58, million. So there's an uptick there. Now the existing home sales was interesting because they're saying that it actually did decline, which it did, from 4.82 million to 4.8, but that's up from an expected 4.68 million. So existing home sales, I believe, personally, are hitting that last push. Federal Reserve statement, 2.25 to 2.5. The expected is 0.75, 3/4 of a basis point. There's rumor, there's like a 20% chance of a full basis point. I personally think they do 3/4 and then they stay hawkish. There you go. You're welcome. I don't know if that's true or not, but we'll see. More importantly, we got to see what happens with the reaction. Jobless claims, we'll see what happens tomorrow. Continuing claims, pretty light across the rest of the week. I don't think anyone's going to really care about any of these numbers, especially because the Fed will address them in their speak, right, after they have their meeting. So let's pull the class here, folks. Let me open it up and launch it. What do you guys think is going to happen? Where do you think we are going to go? I'll put it over here so you guys can see it. We have been pretty bearish, and we've been bearish for a couple of weeks now, and hopefully you guys have been bearish too. A lot of the trades we've seen come across the board have been bearish. Great work, by the way. Awesome job. And it's just kind of sitting that way. Boy, I tell you what, sometimes bear markets are easy when they stay the way they are. You just kind of have to sit through any sort of bounce or short-term little move, and they can come right back. So just keeping that outlook's been pretty decent. It's been pretty easy to do. That last little rally 2 weeks ago was tough, but it actually turned right at that falling 20-day moving average. So technically, the probability stayed in line, and it's been working. All right, guys, straight up 95% voted very quickly. Love it. I'm going to go ahead and close the poll here. Share it with everybody else. You can see it on two screens. There it is. -2, -1, -2. Love it. Still looking a little bit more pessimistic, a little bit more bear coming. I totally get it. Thanks for that, guys. Put that back. Hide the poll, and I will share what I have. It's exactly what you're thinking. -2 on the monthly outlook, -2 on the weekly outlook. Once again, I apologize for that chart, folks, because that is not today's, but we did go through it in pretty good detail. It is below the 20-day moving average, below the 50. The slope is off because the 20 is below the 50. They did flip-flop, but that slope of the 50 is pretty much flat. So I'm right in line with you guys. Thanks for that. Let's get into a sector analysis. I thought this was pretty interesting, and I'm wondering if the majority of the weakness I'm seeing in energy is due to Putin and the war, and worried about, oh boy, like some sort of a, I don't know what's going on with that war, but I think he's doing some sort of a mini draft or something creepy like that. But anyways, there it is. Consumer defensive being the strongest, and barely because it's just flat, and then energy being the weakest. Let's jump into it. You can see it just edged out a little bit. This is different from 3 days, folks. This is 5 days. This is 5 days of trading. So this takes into Thursday, Friday, Monday, Tuesday, Wednesday. So that's what you're seeing. It's a little different from my market outlook so far, which is just Monday, Tuesday, Wednesday, just to help clarify what you're looking at. So everything south. Everything south. Biggest part of these was Thursday and Friday, obviously. But we're not really doing much. Cuban defensive has jumped up a little bit. You'll see the chart here in a second, but energy is just kind of floating a little bit lower. So I thought I pulled the staples, which is the defensive for the XLP or the XL, the select sector spider fund. You can see it's just a little bit of a pop up, but it's not going anywhere. I mean, look at that. It is just right below these levels here. That's 72. It's resistance. If anything, with this decrease in volume, I imagine that's just a bear rally. I don't think a lot is going to make it if these markets decide to turn south. I don't see any one sector doing well. I don't see any, especially if we get capitulation, especially if we finally get traders pulling money out. I don't see money going back into anything that would make sense, at least in the shorter term. You might just want to kind of let things flush out. Here is energy. Energy being the weakest. You could see that it was trying to get up today, and it's just kind of given up the ghosts. It still has a pretty good downtrend in it here. We'll see if it can hold this 75 level that it actually touched the end of May there, or end of April. I don't know. I just don't have much faith in it, especially when you have a gap up. Today's candle is actually pretty ominous. I imagine it comes back and retests that 75. We'll have to keep an eye on that. So there's not much to go on. I try to do these classes fast on Fed days because, hey, I want to share the trades you have, just so you guys got a list to throw darts at, just in case something happens. But let me break it down for you. Keep your powder dry. There's no reason to throw darts at all. You could maybe hedge things out if you're worried about something you're slow playing. Even then, it's going to be hard, especially if volatility picks up. It might be hard to throw some puts out there or whatever you're trying to do. So just kind of sit back, watch what happens. The sentiment is definitely bearish. It has been for some time, but it's still reactionary. I'm still seeing speculative purchasing. And until we get capitulation and any sort of fear, we could expect bounces at some strange places. My theory of why the markets have been up on every Fed day is the anticipation of it being better than it could be. Bottom fishing, period. So watch for false moves. Make sure, give it a day. I mean, I rarely trade on Fed days unless I'm forced. So inflation is not curbed outside of energy. And I'm going to go specific to gas. That's what we've been talking about. That's been on the front run. Hey, let's lower gas prices for the summer. Let's ease it for the people. And it's like, that's great. I'm still paying $4 or $5 a gallon of milk. That's not helping. So the Fed will remain diligent on inflation. I just said will because they said they will. I don't know why they wouldn't. I don't know why they would come out and do one full basis point and then say, okay, that's good enough. It's not. I don't see them spinning this sweetly. So take that for what you will. So you might get that false move that I'm talking about. Watch for false moves, and it might go up, and the Fed might whistle a little bit softer of a tune, saying, "Hey, we expected this, and we think we're good." But buying into it right now, I don't know. My 2 cents. All right, let's get out to the markets and look at trades you're looking at, and we'll go from there. So, we're going to start with Connor. And, sorry guys, I lost my pen. There we go. This is this coin we're doing. A coin was one that I traded when it IPO'd. And I took a bath on it. And it's been very interesting to watch because it's still a pretty volatile stock. And it's still attached, one of the only real places you could trade the cryptos. Came out pretty popular. But look at this consolidation. And Connor's looking at a September 30th 62.75 bear call spread. So let's do that. 62.75. Let's call it right there. Okay. Bear call spread. Sideways to down. Credit spread. I believe that's right, Connor. Hopefully I got that right. Yes, I like it. I like it. And it's just because, man, let's see if I can zoom in on this a little bit more because it's just got it's a wide, there we go. Let me stretch it out, make it look pretty here. Get rid of those chicken scratches. Yeah, there you go. It's a little easier to see it when it's zoomed in. But I do like those strike prices, 75 to 62. Just going to play this range here, thinking that it might consolidate around 70 and eventually bleed off in September 30th. It's what, a week and a half. So week 5. Wow, 5 expiration cycles in September. Kind of funny. I like it. I like it. I like it a lot. Sideways to down. Very nice. Thanks, Connor. All right, Joel. What do we got? UNH? Or is that? Yeah, UNH. United Healthcare. This has been a pretty good trade. Bouncing around a little bit. I imagine you're going to play the crossover on this. September 30th, week and a half from today. 520, 515 bear put spread. Yep, he's playing the rollover. Let's see, 515. Actually, let me zoom in a little bit more on this. Some of these guys are a little bit harder to see, but if I can stretch them out, get a little bit more realistic. So sideways to down here, right, Joel? 520, 515. Drive this in, 520. Oh, no, more down. That's fine. I like it. Playing the lower pivots. Look at the crossover. Lower lows. He's just playing an upper channel. Looks like he's expecting to roll over. This is great if you guys are playing channel. If you're channel trend traders. There we go. Or Bollinger Band. These are great. Yeah, I like it. Playing the rollover. Write it down. UNH. Not taking too big of a bite out of it. Not you could shoot for 510. You could make the argument of 505 if I continue this. Let me draw this a little bit more. Yeah, 500, 500. It just depends on how aggressive you want to get. What I do like about it is Joel's. Let me go ahead and circle this. Joel's playing this area here in the next week and a half. I think we refer to him as dinking and dunking, like dinks and dunks, right? We're not going for grand slams. We're just little hits there, little hits there. And it can be a cool way to trade. It can. High probability, a couple of bucks here. It's kind of great. Thanks, Joel. Something to look at. Moving to UPST. I think, yeah, James has got Upstart Holdings. Let's zoom in on this. Yeah, I'm going to have to do all sorts of fun zooming in on these. It's crazy how far these has fallen when you guys, when you zoom out on them, you can see it just shrinks the chart because they've fallen so much. All right, let's start here. We got a September 30th. We got a butterfly, 22-2018. Put butterfly. See if I can draw some lines. 22-20 and 18. Yeah, hopefully I'm close there. Targeted butterfly to the downside. Cool. You know, hopefully it can stay below that 25. Be patient with it. Like it less today, but still like it. And you know what? I have to agree. I was about to say something, James, and I came back and read your comment. It looked wonderful yesterday. You could hold off on this. It would be nice to see it come back down, and this end is more of a doji candle. That would be kind of cool, or see if it can flip-flop and go red down there. Now, what's interesting about the targeted butterfly, you're really focusing on it staying below that resistance level. Let me draw the line here at about 25, and you can actually place these a little early, kind of like a diagonal spread, because you want to allow some decay on these. So I don't want to say get in now, but if it's going to hit, let me erase those and start over. If it's going to hit this 25, or if it does, and it gives you a candle like this tomorrow, I'd be pretty comfortable putting it on, you know, for a little bit of an expected move to the downside. It'd be nice to see this candle go from green to red, or the next day have a nice red candle down, then you'd have a higher probability. But you're only shooting for, what was it, the 30th, so a week and a half. So I imagine you probably want to move into this maybe Thursday or Friday. But I do like it. It is a bear trade. I'll put it down as a bear trade, even though it's a butterfly. It's targeted to the downside. I like it, James. Thank you. All right, Dan. You got Schlumberger, or I call it Schlumberger. All right, so we've got Schlumberger, as I like to call it. Might be decent sideways up, but want to see if Fed shocks today. Yeah, good point. Maybe sit back, wait for the Fed, but it could be 42, 40, 38 is what he's looking for. Call butterfly. Let me get the lines here. 38, 42, and a 40. Oh yeah, just to revisit back up there. And yeah, you've got the trend. It's almost a symmetrical triangle pattern. It's kind of sloping down here. But I could see that. Sure. Just want to see what the Fed does. And it could consolidate and pop right up. There's a couple things you can do with this. But I do like it sideways to up. Sideways to up. It looks like it really wants to consolidate right where it's at. Right just below that 40 mark. I'll put it on the bull watch though. Just because what you're saying there, Dan, it could create a little bit of, it could get happy and just move a little higher. All right, Joe's got a trade here. Let's take a look at it. GTHX. Bull pullback. Zoom in as I read and click at the same time. Bull pullback, need confirmation. Look at a bull call of 12.5, 15, or 15.17. Depending upon where it lands after today. Okay, yeah. Depending on how high that candle goes. If it revisits its previous high or this morning's high, then you might be pretty good with that. Actually, you know what? I'd probably lean more towards the 15.17. Just, I know it's a little bit out of the money, but I mean, if you want to play something a little bit more aggressive, thinking this might get it in 3 days, you might as well go with a lower risk, higher reward, even though probability's not there. 12.5 might be nice, but it's down here. What was that? 12.5 and 15. Okay, so you'd just be playing something higher probability, lower reward, a little bit higher risk if it rolls over. Me, I'm more of a high reward, low risk trader. And if indeed, because you're saying that need confirmation, and depending on how it ends today, if we get a good something positive, this shoots up, it'll already beat about 15 before you could even get to it. So you might want to do the 15.17 and see if it can shoot up. That being said, this thing might roll over if the markets are bad, and that way you're not even in it. Don't have to worry about it. But I do like the pattern. Let me write it down as a bull potential. GTHX. Thanks, Joe. Good stuff. James got FE. Waiting for Fed, but great bull pattern. Looking to target 47. Let's take a look at it. Oh, yeah. That's a neat one. Utilities. That does have a nice bull pattern. It's got had one for a while. Look at this thing. Channel. Got the channel moving higher. Even this, you've got, look at the consolidation that it had back in May, and it's straight across there. We got an ascending triangle pattern from the last two pivots this month. All sorts of things saying it wants to go higher. But you're right. The Fed might dictate that since it is utilities. Good trades. Great potentials. It just really just depends on where you want to go. Oh yeah, he said 47 for a target, but yeah, you could. Let's see some targets here. Let's do this. We got just below 44. You know, what'd be cool on this one is to snap some Fibos, right? You can do Fibonacci extensions. Just go from here to here. Oh wait, that's the backwards. Yeah, start from here to here to here. So boom, 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 and that might give you some extensions up through here, some choices. But yeah, target-wise, you can pretty much do anything. Diagonal might be a good one. That way it can decay and just let it fly. But I like it. Cool. All right. I figured this would be a short class. Usually it is. Then you type in your awesome trades, cut you loose, and watch the drama unfold, right? But a couple of bulls, couple of bears. Keep over the last week's stuff. I didn't put them all on. It's just because they weren't really triggering or anything. Like Wingstop looks great, but everything else looks decent. It's not like you're gonna throw them away. It's just they're not really doing much now. H. Be patient. I know I've got a lot of people out there, and you know who you are, that love to chase volatility, and it's gonna be volatile. So just make sure you don't. Let's see for current slide. Here is our trade. It's just three of each, 3 bulls, 3 bears. I kind of like it. It's really nice. Yeah. Be patient with them. I always keep my powder dry on Fed days. You're going to get that reaction. It's going to be hard to sit out because that volatility gets exciting sometimes, but just do if you can. All right, guys, enjoy the rest of the day, and thank you so much for your participation. We'll see you next time. Bye, guys.